Yoni Jacobs is the Chief Investment Strategist at Chart Profit Capital.
Yoni Jacobs is the Executive Director and Portfolio Manager of Chart Profit Capital. He joins us from the NASDAQ for his perspective.
Yoni Jacobs.
Yoni Jacobs, Executive Director and Chief Investment Strategist at Chart Profit. Yoni Jacobs of Chart Profit Capital.
Thank you very much. Yoni Jacobs is Chief Investment Strategist at Chart Profit Capital.
Well, our next guest says that markets are at a major turning point, but in good or bad markets, there's always a way to make money. So joining us for today's trade is Yoni Jacobs, Executive Director and Chief Investment Strategist at Chart Profit, and author of the book Gold Bubble, Profiting from Gold's Impending Collapse.
So Netflix, it's up over 1,000% since late 2008. So where could it possibly go from here? Our next guest says it's time to short the stock.
What we're seeing is decelerating or weakening momentum, and usually that's a sign that the stock price will usually follow next. If this is a true short play on Netflix, I would say we'd go down to 80 or 100.
We've been seeing a wave of IPOs and some pretty extreme valuations for technology companies. So could we be in yet another tech bubble? Yoni Jacobs is Executive Director and Portfolio Manager at Chart Profit Capital. It's an investment fund. He says we very well could be headed into that. Here's his quote: "Such extreme euphoria regarding the future of these companies could be pointing to a renewed technology bubble that will be met with failed expectations and big losses."
At what point do the expectations, are expectations too high and valuations too high, especially when these companies haven't proven profitability yet? Unless Facebook can close that gap, the valuations are way too high. LinkedIn is tremendously overvalued, as well as if Pandora came out yesterday. They're worth $2 to $4 billion, and they're actually losing money. As well as Groupon, which is worth $30 billion now, which is bigger than a lot of companies out there. They actually lost $413 million last year. Institutions are probably selling them now because they've made so much money. It looks like their popularity may be peaking, and I don't see how they're worth $100 billion.
Yoni, thanks very much indeed for that voice of caution.
You were quoted yesterday before the earnings report came out as saying, quote, "Tonight's earnings may show us whether or not they are set to disappear as an influence in the smartphone battle."
They have huge downside momentum. They have management issues. And unless they show that they can make a comeback, it's going to be very hard for RIM to get back its dominant position in the smartphone industry. Silicon Image is SIMG. It's a small company of only around 400 million. At the same time, they have no debt. They have 150 million in cash, which is over a third of its market share. And people are overlooking the fact that they announced that their MHL chip is going to be in the next Samsung Galaxy phone, which we think will compete with the iPhone. I think their best strategy would be to take those patents that could be used by bigger companies like Apple, Google, Amazon, Microsoft even, and they could do something with that that could not only advance technology but could help them as competitive leverage against some of the other companies.
Has mass speculation in gold created a bubble waiting to burst?
Gold has been a winning strategy, but it's about to come to an end, according to my guest today, Yoni Jacobs. He is the Chief Investment Strategist at Chart Profit and the author of a new book, Gold Bubble, Profiting from Gold's Impending Collapse.
He thinks that the bubble is ready to burst. Who says it's a bubble? Well, Yoni does.
When you make an extreme prediction like this, I think people are shocked.
Our next guest says there's a crash and burn to come in gold. Yoni Jacobs, Executive Director and Chief Investment Strategist at Chart Profit Capital, joins us from New York City. Yoni, good evening to you. I talked to so many people who say that at some point people are going to veer back into the gold because they don't trust governments, they don't trust politicians to run the world economy, and here you are saying that gold is going to crash and burn to a fume of where it is today. Where in the world do you get that from?
Yoni Jacobs of Chart Profit Capital says gold will hit $700 in 5 years. $700, such a huge breakdown in gold.
I completely understand what people that buy gold are saying. They basically don't trust the currency, they don't trust the government. They're looking for a tangible store of value that's going to retain its value even when the market doesn't perform well. The only problem is that they've already relied on this, that gold will always go up, and the fundamentals are already priced in. We're at a point where this is all already priced in. The fundamental reasons for buying gold were correct, but once we get up 600% from the 2000 lows, or thousands of percent from 1970s, for something that's supposed to be a stable asset, I think that's already priced in. I think that a lot of the factors involved are already showing us that either the top is in, or the world markets will start leading the way, and then gold will follow.
How big of a collapse are we talking about? How far down do you think gold's going to go?
Usually when you have a bubble, just as there was a lot of excitement and enthusiasm on the way up, there's a lot of panic and selling on the way down. And even, it breaks above the long-term average and flies above it, but on the way down it actually overshoots to the downside. We're going down to probably around 700. Right now we're seeing that so many people have made money buying and selling gold or investing in it, and they're spurred on to do it themselves. The problem is that when that happens, it's usually near the peak.
Yoni Jacobs, would you expect something big to happen come September?
I think people are pushing it off the entire summer. It's the summer doldrums. People are looking at the election year, waiting for some kind of action, and especially looking at the central banks and the Fed to do something. I'm expecting a negative shock, but there still is a possibility that the central banks do something, stimulate the economy, stimulate with more money printing, and that helps gold. I think that gold will likely fall together with the markets if we enter a recession. What we're seeing right now is a recessionary or deflationary environment coming, with emerging market slowdown in China, commodity slowdown. You see oil under 100 and gold under 1,600 now. But I think we're approaching a time where gold might break that long-term trend. Gold is not safe. The miners has been what I've been shorting the entire time. If you're going to see weakness in gold, it's going to be led by the miners who are dealing with gold and are seeing the slowdown hitting them. Right now, that's a leading indicator for gold to go down. That's kind of a dangerous sign. I'm still looking at 1,800 as the next resistance level, which gold failed at twice already this year. The Fed and central banks around the world have dug themselves into a hole that is hard to get out of. It's all based on, is QE going to work to boost the economy here? Well, I think gold will go down from here in either scenario of a good economy or a bad economy. If people are right when they say that there's an oversupply of natural gas, that it's much cheaper to extract it nowadays. The problem is, at a certain point, the fundamentals are already priced in. And we've seen such heavy selling of natural gas, and we saw capitulation selling by a lot of the hedge funds and a lot of the funds. So when we see capitulation selling, it's time to buy. Right now, we're looking at natural gas. We think it's the buy of the decade. We're bullish on natural gas. We think it's the buy of the decade. We'd like to get into companies that will go up if the market continues to go up, will outperform the market if it goes down, but at the same time, I'm going to give you support levels where you know to get out in case the stocks do fall.
Yoni Jacobs, Executive Director and Portfolio Manager at Chart Profit Capital.